Abby, Shannon, I hope you guys are doing well. It's good to see you.
Hi. I was trying to be off camera because I was trying to scarf down some lunch really quick. How
Oh, you're good. You're good. I do the
you
same
doing?
thing. I'm doing good. Doing
Good.
good.
Come on,
I,
baby.
I love that you're using the note taker. Got to use all the AI the best you can.
If I'm being honest, I don't know how that's doing that. I think it's from another Zoom meeting that I did, and I was just automatically doing it.
Okay.
I didn't do
Okay.
anything special. I think somehow it's attached to my Zoom.
Oh, nice.
Yeah. So I'll take
Okay.
it. Just saying.
Yeah. Hey, it works.
Stop looking at me like
Christine, how are you?
that.
Cool. Well, it is 102. Oh, Shannon, I got a pup with me too.
Yeah, I've got two right now. My parents are out of town, so I have theirs also.
Oh, nice.
Yeah, so I'm
Oh,
trying
that's
to do
cool.
everything from home so I don't have to leave them in crates all day long.
Oh, that's awesome.
Yeah.
So I got mine, but he's being a lazy oaf right now. He is passed out under my desk. So
Yeah, that's what the other one's doing. This one was just looking at me with sheer disdain, like, why aren't you loving on me?
that's awesome. That's awesome. Well, cool. Well, for everybody that's here now, really appreciate you jumping into this. I am gonna be recording these every month. And I'm going to put them on my YouTube um, just as a resource for you um, to make in case you guys run into any of these scenarios, you'll always have the resources that you can look back on. But as always, give me a call, ask questions, even if you're not sending me the deal, if you're in the mid swing of something doesn't seem right. I want all of you guys to have this information um, so that you can sniff out of something weird, but also be knowledgeable for all of your clients. That's the ultimate goal of this. Um, so just as a quick recap, what we're going to do is I have a couple things for everybody here that we're going to go over. I only want to be talking for 10, maybe 15 minutes, and then leave the other 15 minutes for asking questions, Q&As. If you have certain scenarios that you are running into that are confusing outside of what we're talking about here, I want y'all to be able to bounce any ideas or any questions or any concerns off of me through this. Um, the idea behind this is not for all of you to know, have to have 20% down on this or 10% on that or none of that. Basically, an inch deep and a mile wide is the idea here. So, for example, today I'm going to go over a couple loan programs that if investors come up and talk to you or come up to you or come up and talk to you, that's not. If you have an investor coming to you wanting to get a home, I want you to be able to go back to them and say, okay, yeah, whoever your lender is, of course, get, a lender letter, but you should ask them about their DSCR program and if they have a sweep loan available to you. Because as I'm learning about all these and as our company Fairway is rolling these out, I'm quickly learning that just getting the old 20% down Fannie Freddie investment loan is possibly not the best financial situation for some folks. And we're really leaning into the what we call the non-QM space. So a lot of business owners, a lot of people with multiple properties, it makes it really hard for them to qualify for loans, or it's just a pain in the ass just to get them done. These are quick and easy, and that's just what I want to show y'all here today. So I'll zip through it quick. Um, and since we're on the subject of AI, I just have to highlight what this little screen that you guys are looking at. I'm just super stoked that my chat GPT came up with this. I'm not afraid of using AI because it makes us really efficient, but I don't know if this looks AI to anybody else, but I typed it in. The first one was trash. I just said this is you need to improve, and it popped up with this, and it was pretty dope. So I don't know. For me, I think it's cool, but there you go. Okay, so has anybody here seen or know anything about a DSCR loan or what it is?
I've
Okay.
heard of it, but I haven't had to use it, and I don't think I'm proficient in it.
Okay. Well, and that's the thing is, no, you guys shouldn't, as realtors, you should not be extremely proficient. That is not your job. That's my job, right? Um, but we should at least know about it. So DSCR means debt service coverage ratio. So essentially how this works is we don't need to see any income from the clients. This is what's really, really cool about this loan is all we're qualifying them on is the property itself. So assuming the amount of rent they're getting from this investment property is at or equal to 75% of the mortgage payment, in most cases, we can get them qualified. So if the mortgage payment is $1,000 and we're collecting at least 75 or $750 in rent, we can just get them qualified right through there without seeing any additional income documentation whatsoever. So all of your self-employed investors, if they have bigger investment portfolios and we don't want to just go through each property like we would have to if it's just a regular Fannie Freddie loan, this one is amazing. Okay. I'm going to stop there. Does anybody have questions? Or does that make sense? Okay. Um, so it's really based on cash flow. We have to kind of change our thinking. We're not looking at debt to income. How much money do you make? How much is the mortgage? All that is just thrown out the window. It's solely based on the 123 Main Street. Now, a quick caveat is I know I mentioned 75, or if you're collecting 750 bucks and the mortgage is 1,000, that's the bare minimum. Typically, your first time investor is going to need at least to break even, if not more. Another part of this too is credit score has to be decent. We can't have the 620 credit score type of borrower for this. Um, and in addition, just it is an investment property, so typically 20% down is where we like to see to get decent rates. We can do these at 15% down, but your rate's going to be trash. You're probably going to need, 1.2 or higher in that income. So again, these are for well-qualified investors. But typically, if someone's coming to you, they've done it before, they know what they're doing, and they're in a good spot. Okay. I'm not necessarily, for sake of time, I'm not necessarily going to run through every single one of these bullet points. But again, this is going to be recorded and you guys will have access to everything. Okay. Um, and one thing too that's nice about these is we can do these with Airbnbs. Does not have to be long-term rentals. Now, again, long-term rental, high credit score, a lot of money down always gets you the best terms. Okay. We can do these for as little loan amounts as 50 grand, which is super nice. Um, and all the way up to 3 million. The other cool thing is, again, just like most investment properties, you can do this up to 4 properties. So that's also something that's very, 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 very attractive for people. So, that is essentially very, very brief of DSCR. I know I zipped through it quick, but that's intentional. We just want to make sure that if someone is coming to you as an investor, hey, it's kind of a pain in the butt for me to qualify. It's a hard time. My taxes are all over the place, or I don't show much income on my taxes. The typical self-employed buyer. Those are the folks that we want to at least bring the DSCR to. Okay. All right. Next, unless there's no questions before I move on to the next one. The next one is what we call the home equity optimizer. Now, this is a unique type of loan that some banks call a sweep loan. Okay. This is a HELOC in first position. So I think we're all familiar with what a HELOC is, right? We have our normal mortgage, we got some equity. We don't want to give up our 2% rate, but we need to make some home improvements. So we get a HELOC, but that's typically in second position. So this one is a HELOC in the very first position. It is your primary mortgage. But what is extremely awesome about this loan is that assuming the person getting this makes more money than they spend, then every single deposit that's made goes towards paying down your principal. Okay. Now, what does that mean? When we're talking investors specifically. So let's just say they have, two or three, kids living in a home and they make multiple Venmo deposits for paying the rent or even one deposit. It doesn't necessarily matter, right? So the income comes in, and if that's more than the mortgage, that payment goes to principal every single night. Now, you could also use this for your primary residence. Like for folks like you and me, my wife brings home a few paychecks. She uses Amazon like crazy. And because we use it like crazy, we return a whole bunch of stuff to Amazon. Even those Amazon returns also go help to paying down that principal. Because how this loan works is if all the deposits that come in every single night, it recalculates the interest. So even that $5 return pays down principal. There are no minimum payments, if you will, on this loan. Assuming all of your paychecks or those rent checks get put into it, you're able to pay down these loans extremely fast. Okay. I'm hoping all that makes sense and everybody's getting it. It seems like it. And I'm going to move on just to kind of show you, talk about how the payments work. So you don't have to go in and manually make a payment on the first of the month, right? So in investor's stance, as long as they're getting those rent checks, it comes in, it nightly sweeps to reduce the daily interest, and then the monthly sweep, as long as those are coming in monthly, it satisfies the required payment. So yes, there is a required payment, but the second a deposit hits, it counts. And the cool thing is there's no prepayment penalties on this either. Pretty much all the loans that we have that we're going to offer, for the majority of them, aren't going to have prepayments or prepayment penalties, excuse me. So just to kind of give you an idea, and this is more of a primary home example, the mortgage balance is 420 grand. Between you and whoever else, or I know more, rent check probably won't be 9 grand, but if deposits come in at $9,000, now the balance you use to calculate what's left is reduced by $9,000. And that, as you're looking at this every single month, think about if you paid down your mortgage by 9 grand every single month, you're going to pay that thing off in 10 years. And that's a really cool thing about these first position HELOC loans. So intentionally not going deep into this, just want to get everybody here the idea of what these two are. Okay, so I do want to pause there and see if anybody has questions or concerns, or if this is just completely not making sense. Speak up, because I want you to feel confident when this next investor, gives you a call and they're looking for their next property. And if everybody's not saying anything, I'm going to assume that you have it dialed in, and I explained it perfectly. Okay,
Well, hold on. Sorry. I do have a question.
nice. How are you,
So,
Abby?
I'm good. Thanks. How are you today, Aaron?
I'm awesome.
Good. So, deposits made to checking, even though, okay, so your mortgage balance is 420, you deposit into your checking account $9,000. But what if you don't want all that $9,000 to go towards the interest calculation or towards your mortgage balance? Like, how, I guess you're depositing specifically into the account that's for the mortgage.
Hmm.
Who has
Yeah.
$9,000 to make on a home payment though? Like explain that to me, would you?
Yeah. Oh, absolutely. And as you're saying that, I did leave out a little bit of information that is important for this.
Okay.
So this example right here is for a primary residence.
Yeah.
Okay. So how this would work if it was your loan, you would basically have all of your paychecks and you would be using this first position HELOC as your checking account. So you sell two homes, you get deposits of, 20 grand that month. You're still going to you still use that to buy your groceries and everything else too. So it's not like you're dumping all of your income into this.
Ah,
So,
okay.
yeah. So you have money coming and going. And that's why this is, for investors, this is pretty simple because they can just set this account and leave it for them. Rent
Yeah, yeah.
comes in, but for us, you're still paying your groceries, you're still doing all the things out of this. And assuming you're making more than you're spending, this is a great
Yeah.
way to get the loan paid off quicker.
Okay. Okay, now I understand. I was like, who wants to make a $9,000 house payment every month? That's asinine.
Yeah.
I get it now.
Yeah.
Thank you.
Yep, and also too from an investor perspective, why this loan is also very, very flexible and amazing is assuming you have 20% down, and as these your tenants are making payments, that's creating equity in which you have access to at the tip of the finger. So, and people move out and you need to replace carpets, you need to, fix whatever. You have that equity in that investment property that you can use straight away. So you're not having to go to your savings account and pull out 20 grand to do the work. You have it in that home. So that's also why this is an amazing thing for investors because they just have that access to everything so easily. And because imagine if you're an investor and you're tight on funds, and these tenants are crappy, they got a dog and you have to replace the carpet, but you don't have the money. You'd have to go through a whole refinance of the investment loan and do all the things. Not with this. So that's a huge benefit and a huge pickup for our investors.
Yeah, that makes sense. Thank you.
Yeah, yeah, no, of course. Of course. I appreciate the questions. Um, yeah, who else? I mean, I guess who has any investors that they're working with that has had, any experience of getting a loan just being crummy, just based on their situation? And do we think that, or do we think that this is valuable? Number one, I guess I should ask the people here, like knowing these things, is this helpful? And you can tell me this is terrible, never do it again. I'm a big boy, I can take it.
I guess I have a question. Do you guys offer this home equity optimizer when you're talking to investors and go through this, or do you immediately say you should do the DSCR loan?
Well, it's all based on the individual's situation, right? Um, Part of what I like to pride myself on is not being what's called a golden retriever. Okay. I love Enzo. He's right here. He's laying under me. He's a beautiful dog. But he does exactly what I say. And to be really good at my job and what we can really elevate the game is, let's just say a guy comes, I want a DSCR loan, that's what I want. Absolutely. We're going to show them that we're going to do everything we can. But if by looking at their loan application and their financials, and if they're continually tight on funds, then I might suggest this just to show them what's out there. Okay. I don't want to argue with clients and do against their wishes, but if I'm not showing them options and showing them what's out there, they could just completely have blinders and not know that this might be the better situation. Or shoot, even just the regular 20% down Fannie Freddie might be the best situation for them. Yeah, we really don't know. And that's back to that same point. That's why I'm giving this to you guys, so that you're also knowing or in the know of what's available out there to people so that they can go back and ask their lender. Like this is not necessarily for you guys to send me, pardon me, to send me every loan you can. That's not the idea. This is for you to know what's out there to help direct your clients. Because if you come back and say, hey, did you look at a DSCR and they had no idea about it, and it turns out to be the greatest thing in the world, they're going to come back to you as the hero in the story.
Quick question.
But
The name of this loan's the sweep loan, right? What is the official name of this one right here? Because
So
it's,
everything is
well,
trademarked. So ours is called the Home Equity Optimizer. Okay.
okay. And
Um,
how's that from different from the all-in-one loan?
it's the exact same thing from the
Thank you.
exact same
Okay,
bank
that's
from
as you were
CMG.
explaining it, I was like, I know this, but the name was
Yeah.
throwing me off. Okay.
Yep.
Cool. Thank you.
Yep.
That's helpful.
Once upon a time, CMG was recruiting me hard, and this was their thing. And they're like, "You don't have this. Nobody has this. We're the first
Yep,
of the
heard
ones."
it.
And then here we are. Fairway rolls it out, and I'm like, "Gotcha." So yeah, it is the exact same thing. And what is, to be fair to what CMG, what they were doing when they were recruiting me, they are true that not everybody has this. Um, and not many lenders do now as well. So if they're going through you know, I don't know, Guild mortgage, I don't really know if Guild has it or not. I doubt it, but that is something to consider for when they are choosing the better lender for their situation. So, yep, yep, yep. What else? Okay, is this valuable? Okay, I got one nod. I'll take one out of four. That's fine. That works for me. Um, okay, so next month, I'm going to go over every loan product we have or that's available to everybody. I'm trying not to make this so specific to Fairway, right? I will want to talk about what every loan that you can do to be non-contingent. I am going to beat this to death as much as I can on social media, but there is no way that y'all should be being contingent, assuming the people leaving have a decent amount of equity, right? At least 10%. Well, let's call it 15% of their exit home. There is no reason that you guys should be doing contingent offers. There are 4 to 5 different options that you can go that don't cost the clients a ton of money. Yes, there are a little bit of costs. Banks are like casinos. They're always going to win in some way, right? And coming from a lender, I know that's kind of weird to say, but it's our job to find the most cost-effective way to pull that equity out early, get these folks in their home, and make it happen. There are some that are really expensive, but they're super easy, and some that are very, very cheap, really easy to make happen, and we're doing it all day long. So we do have a couple success stories on a few of you on the call right now. And I love hearing it that it just makes the process for the clients so much easier. They don't have to, the whole thing, we've all heard it before. They don't have to stress about moving out so quick. They can take their time. And the folks that I'm talking about that we did somewhat recently is they're just elderly. They don't want to move out in 30 days. It's really hard for them. Um, they really can. I think some of those things are extremely valuable. Even though it did cost them a little bit extra equity, the peace of mind and the happiness and the ease of the move made it worth it. And I'm hoping that we just highlighted the realtors and made that a lot easier because they're the ones that suggested that we do that, or at least got it in the direction in which we could do that. So, yeah, well, that's all I have. I want to keep these quick. I don't want y'all to spend all day on this. This will be recorded. I will put them on my YouTube so that you can refer back to this. I'll email that to all of you that are here. And next month, so it'll be the second Tuesday of every month, same time, same place. And if you have questions between now and then on any of this, holler at me. I can send you these slides. We can send you all the information you need. And y'all got my number, so let me know. All right, one last chance for questions before I end it. Okay. Well, I appreciate y'all. We'll see you
Thanks,
soon.
Aaron.
Thanks,
Yep.
Aaron. Bye.
No worries. Thank you. See you, everybody.
Thanks. Bye.